What is happening, tech titans and future shapers? The pace of innovation is relentless, and if you blink, you might miss the next seismic shift. Welcome back to Qualcomm Pulse, where we bring you the unmissable updates that are defining tomorrow today. Get ready for a rapid-fire rundown of the biggest stories breaking across the tech universe. From market-moving financial reports to strategic plays in the heart of AI development, we've got it all. You're about to dive into the crucial insights that everyone will be talking about. Don't get left behind, buckle up for a high-octane journey through the latest tech breakthroughs. Let's get into it. First up, a look at how major players are performing after their latest financial disclosures and what it means for the broader market. Next, we're diving deep into the world of AI infrastructure and the companies fueling its explosive growth. We'll break down what the latest earnings reports tell us about the demand for cutting-edge silicon and the strategies shaping the future of data centers. Then, get ready for an in-depth analysis of a key player's strategic positioning and analyst outlook ahead of their critical earnings announcement. We'll explore how their custom chip designs and networking solutions are setting them apart in a hyper-competitive landscape. Finally, we're examining the broader AI narrative, the massive investments by hyperscalers, and how even enterprise adoption is evolving. It's a complex ecosystem, and we're here to unpack it all for you. Stick around, you won't want to miss this. Subscribe and hit that notification bell so you never miss an update. Market movers under the microscope. Following recent financial disclosures, key industry players are facing intense scrutiny, with their share prices experiencing notable shifts. Nvidia and Marvell Technology, two titans in the semiconductor space, saw their shares dip after releasing their latest earnings reports. This has naturally led to questions about the broader market sentiment and the performance trajectory of other major companies within the sector. Specifically, attention is now turning to Broadcom, another significant entity, as investors and analysts eagerly anticipate its upcoming financial results. The question on everyone's mind is whether Broadcom's stock will buck the trend and demonstrate resilience or face similar headwinds. Unity Software, a prominent name in the real-time development platform space, recently announced its fourth-quarter financial results. The company reported a significant increase in revenue, reaching $609 million, marking a 35% jump year-over-year, and surpassing the consensus estimate of $562.71 million. This robust revenue growth signals strong demand for Unity's services and products. However, the company also reported a quarterly loss of 66 cents per share. This mixed financial picture, strong top-line growth coupled with a net loss, often sparks debate among investors about the company's profitability path and long-term financial health. The market will be closely watching how these results are interpreted and whether they influence investor confidence in similar growth-oriented tech companies. The performance of these companies is particularly significant given the current economic climate and the rapidly evolving technological landscape, especially within artificial intelligence and cloud computing. The semiconductor industry, in particular, is a bellwether for technological advancement and economic health, with companies like Nvidia and Broadcom playing pivotal roles in powering everything from AI data centers to consumer devices. Unity's results also highlight the ongoing demand for sophisticated software tools that enable the creation of immersive digital experiences, from gaming to the metaverse. The market's reaction to these earnings reports will provide crucial insights into investor sentiment, sector-specific challenges, and the overall health of the tech economy as it navigates the complexities of innovation, supply chains, and global economic factors. The anticipation surrounding Broadcom's upcoming earnings is heightened by these recent performance indicators, as stakeholders seek to understand the prevailing trends and potential future directions for the industry as a whole. Audience impact. Investors are closely analyzing these earnings reports to gauge the overall health of the tech sector and identify potential investment opportunities amidst market volatility. Analysts are debating the sustainability of growth and profitability for companies in the AI and semiconductor space. What does this mean for the companies powering our digital world? Stay tuned as we break down the strategies and predictions for the next big earnings announcement. AI's architects, Broadcom's earnings preview. As the artificial intelligence revolution continues its rapid ascent, all eyes are on the key players providing the foundational infrastructure. Broadcom, a giant in the semiconductor and infrastructure software sectors, is poised to release its third-quarter fiscal 2025 results on September 4th. Investors are keen to understand how the company is navigating the explosive demand for AI, particularly its custom AI accelerators, or XPUs, and its high-speed networking solutions. Broadcom is expected to report revenues of approximately $15.8 billion, aligning closely with the Zacks consensus estimate of $15.83 billion, which suggests a robust year-over-year growth of 21.1%. The consensus earnings per share mark stands at $1.66, indicating a significant 33.9% increase from the previous year. This consistent earnings beat over the last 4 quarters, with an average surprise of 3.2%, underscores Broadcom's operational efficiency and market strength. However, the upcoming report is expected to reveal a nuanced picture. While Broadcom anticipates continued growth in its enterprise networking and broadband segments, it foresees some sluggishness in server storage, wireless, and industrial businesses. Non-AI semiconductor revenues are projected to be around $4 billion, remaining relatively flat sequentially. The company's guidance suggests a modest sequential revenue growth of 21% year-over-year, but a slight decline in gross margin by roughly 130 basis points sequentially, attributed to a higher mix of XPUs within its AI revenue stream. This shift towards AI-specific chips, while driving overall growth, appears to be impacting margins in the short term. Broadcom expects an adjusted EBITDA margin of 66%, reflecting a 70 bps sequential decline. Despite potential margin pressures, Broadcom's AI segment is a significant growth driver. The company expects AI revenues to surge 60% year-over-year to $5.1 billion, fueled by aggressive investments from hyperscaler partners in high-performance accelerators and AI data centers. Broadcom's custom AI accelerators, ASICs, are crucial for training generative AI models, requiring complex integration of compute, memory, and I/O. The company projects massive opportunities in the AI space, with 3 major hyperscalers planning to deploy millions of XPU clusters by 2027, a substantial portion of which are expected to be custom solutions. Furthermore, Broadcom's networking portfolio, including its Jericho 4 Ethernet fabric router capable of interconnecting over 1 million XPUs, is critical for enabling these large-scale AI deployments. AI networking revenues alone jumped 170% year-over-year, accounting for 40% of AI revenues in the second quarter of fiscal 2025. Audience impact. Analysts are closely watching Broadcom's ability to balance AI-driven growth with margin management and its strategic positioning against competitors like Nvidia. The market is also keen on updates regarding VMware's integration and its contribution to Broadcom's software segment. Can Broadcom maintain its momentum and navigate these evolving market dynamics? We'll explore another analyst's perspective on this AI powerhouse next. Broadcom's AI ascendancy, an analyst's bullish outlook. While Nvidia often captures the spotlight in the artificial intelligence arena, Broadcom has quietly established itself as a formidable force, securing a position among the world's top 10 most valuable companies. Its strategic focus on custom ASICs, application-specific integrated circuits, and high-speed networking infrastructure has made it an indispensable partner for hyperscalers like Google, Meta, OpenAI, ByteDance, and Apple. Instead of directly competing with Nvidia's GPU dominance, Broadcom has carved out a niche by supplying tailored chips designed for specialized AI functions, a strategy that has yielded remarkable returns for its shareholders, with the stock soaring nearly 500% over the past 3 years. As Broadcom prepares to announce its fiscal third quarter, July quarter earnings, the key question is whether this impressive momentum can be sustained. Rick Schaefer, a highly ranked analyst from Oppenheimer, anticipates upside for both the current quarter's results and the outlook for the fourth quarter. Schaefer projects semiconductor revenue, which constitutes 56% of Broadcom's business, to increase by 8% sequentially and 26% year-over-year. Crucially, the AI segment, already representing over half of Broadcom's semiconductor revenue, is expected to grow by 16% sequentially, reaching $5.1 billion. This growth is underpinned by Broadcom's involvement in 7 AI ASIC projects, including new collaborations with Apple and OpenAI slated for 2026. Schaefer also highlights the persistent strength in networking, driven by the increasing adoption of Ethernet by cloud service providers for scale-out architectures. However, not all segments are expected to mirror this growth. Schaefer anticipates that non-AI semiconductors, which make up 48% of the semiconductor segment, will remain flat sequentially and decline 2% year-over-year due to seasonal trends in the wireless business. The wireless segment, representing 20% of semis, might see a slight dip as Apple potentially insources its Wi-Fi and Bluetooth components for the iPhone 17. Nevertheless, Schaefer believes that content losses in this area will be offset by gains in mid-band transmission and reception, shared with Skyworks, while the broadband segment is expected to see modest improvement. Beyond semiconductors, Broadcom's software division remains a stable pillar, with Schaefer forecasting 2% sequential and 16% year-over-year revenue growth. This is primarily driven by the company's successful transition of VMware products from perpetual licenses to 3-year subscriptions, a shift that is on track for completion by fiscal 2026, with 87% of top customers already onboarded by the end of Q2. Audience impact. Oppenheimer's positive outlook and increased price target of $325 for Broadcom reflect strong confidence in the company's AI strategy and diversified business model. The consensus among Wall Street analysts remains overwhelmingly bullish, with a strong buy rating and an average price target suggesting further upside. With such strong analyst backing, what does this mean for the broader AI hardware landscape? We'll explore the big picture of AI infrastructure and hyperscaler investments in our next segment. Nvidia's reign and the shifting AI landscape. Nvidia continues to set the pace for the artificial intelligence industry, with its recent earnings report underscoring both the immense demand for its graphics processing units, GPUs, and the increasing concentration of power among a select group of hyperscaler cloud providers. Despite geopolitical challenges and the emergence of new competitors, Nvidia's robust financial performance solidifies its central role in the ongoing AI revolution. The narrative extends beyond mere financial figures. It's about the fundamental reshaping of infrastructure itself. Hyperscalers are making colossal investments in AI factories, betting that substantial GPU expenditures will yield significant efficiency gains and create new competitive advantages. While enterprises are adopting AI more cautiously, advancements in networking, hybrid data strategies, and evolving vendor ecosystems signal a rapid industry-wide shift towards a new era of computing. In an exclusive analysis on the CubePod, industry veterans John Furrier and Dave Vellante delved into Nvidia's earnings and their implications for broader market dynamics. Their discussion covered everything from VMware's integration under Broadcom to the challenges of enterprise AI adoption and ethical considerations. Furrier noted Nvidia's continued dominance, even with a shortfall in specific product lines, and highlighted that the company's revenue growth remains strong despite the absence of sales to China. He pointed out that a mere handful of customers account for nearly 40% of Nvidia's sales, a concentration that presents both opportunities and risks. Vellante emphasized that the quarter served as a validation of the ongoing AI momentum, with Nvidia growing at an impressive 50% year-over-year. This heavy reliance on a few major clients is a direct consequence of hyperscalers adopting a spend more, save more approach, where increased GPU investment leads to improved operational efficiency. This dynamic is influencing strategies from model training to deployment. Vellante suggested that this efficiency is a key factor in the development of advanced AI models like GPT-5. Another significant topic was VMware's post-acquisition trajectory under Broadcom. Furrier observed that the market's perception of VMware has shifted dramatically from skepticism to surprise at the product delivery under Broadcom's stewardship, especially following initial concerns about price increases. Broadcom's increasing significance in AI data center architectures was evident at events like VMware Explore and Hot Chips. Its networking capabilities are seen as crucial complements to Nvidia's GPU leadership, enabling seamless scaling and interconnectivity. The integration of VMware's software with Broadcom's hardware ecosystem points to a strategic push towards hybrid and on-premises AI solutions. Furrier also touched upon the slower pace of enterprise AI adoption compared to hyperscalers, citing security concerns, regulatory hurdles, and integration complexities. He referenced Dell Technologies' recent results, where a dip in storage revenue reflected the uneven transition to hybrid and on-premises AI deployments, suggesting that while enterprise demand is growing, the adoption cycle is considerably longer. Audience impact. The analysis highlights the critical role of hyperscalers in driving AI infrastructure growth and the strategic importance of companies like Nvidia and Broadcom in this ecosystem. It also points to the evolving enterprise adoption landscape and the need for robust networking solutions to support AI workloads. As the AI race intensifies, who is best positioned to capitalize on these massive infrastructure shifts? We'll wrap up with a quick recap of today's top stories and a call to action. And that's a wrap on today's essential tech updates. We saw Nvidia and Marvell shares face headwinds after earnings, while all eyes turned to Broadcom's upcoming Q3 report amidst a booming AI market. We also delved into analyst optimism for Broadcom's AI ASIC and networking strategies and explored the broader AI landscape, from hyperscaler investments to enterprise adoption. Don't miss out on the next wave of innovation. Hit that like button if you found this valuable, subscribe to Qualcomm Pulse for your daily dose of tech insights, ring that notification bell to stay ahead, and share your thoughts on these stories in the comments below. Follow us on all social platforms to join the conversation. See you next time.